Hello and welcome, everybody. Thank you so much for joining today. My name is Maria Springer, and I'm the founder and CEO of Capital Department. We are a fundraising advisory firm that has raised over $225 million for early stage startups. And I am so thrilled to be joined today by Selma Studer and Kelley Frank, who are the COO and Vice President of Capital Department. They've led some of the biggest Reg CF campaigns in the nation. And we're also joined today by the CTO of Kingscrowd, Brian Belley, who will be sharing some of the data behind the big breakout raises this year. With that, we'll also welcome the audience to ask questions about what it takes to run a best-in-class Reg CF round. And with that, let's get started. All right. It's my pleasure to introduce our all-star panelist lineup. Brian, over to you.
Thank you for the introduction, and we are super excited to have everyone join us today. I think we're going to have some really actionable takeaways for everyone to come away with. So as Maria mentioned, I'm the CTO of Kingscrowd. I'm also on the board of the Crowdfunding Professional Association. So at Kingscrowd, we are a very data-driven analysis company. We look at all the investment opportunities that are happening online through regulation crowdfunding, Regulation A. So hopefully today I will be bringing some of that data and perspective to help set the context and move the conversation forward.
Thank you, Brian. It's a pleasure to work with you and have you here. Over to you, Selma.
Thanks, Maria. As Maria mentioned, I'm COO at Capital Department. I've been with the company since the very beginning and have worked on some of our most successful raises, several raising 1 million or more. Spent the first half of my career in corporate communications at large multinational companies before pivoting into startup and venture, and really excited to be here to talk about best-in-class deals. I love working with founders to fund their dreams.
And finally, over to Kelley Frank, our Vice President.
Thank you, Maria, and good afternoon, everyone. Thank you for joining us. I've spent the last 3 years helping early stage founders raise multi-million-dollar campaigns with the Capital Department team. Before that, I worked at Universal Music as the Global Marketing Director. I also pivoted into tech, where I worked at a unicorn here in Berlin, Germany, and I am also a mentor at Techstars.
Awesome. Thank you, Kelley. Thank you, Selma. Thank you, Brian. And let's get into it. So we're going to do about a 25-minute panel before we move into the Q&A. And we're really excited to begin talking about the state of community rounds and this industry overall. So recently, the CEO of Robinhood, Vlad Tenev, was interviewed by Bloomberg. And he said that the bulk of interesting opportunities today can be found in the private markets. He also said that the greatest tragedy or inequity in the capital markets is the lack of exposure for retail investors. And as companies stay private longer, what does that mean for the state of community rounds and the future of Reg CF and Reg A? So with that, Brian, let's start with you.
Excellent. Well, I'm going to share my screen. I did grab just a couple quick charts that I think would be helpful to set the stage for what you were just talking about. So the evolving composition of the US equities market, these are some quick charts that PitchBook and Morningstar put together that shows since 2000 through 2025, more and more of the overall US equity markets are becoming private, right? So in 2000, you could invest in a broad index fund ETF and get most of your exposure to US equities. Today, it is growing, and you can see that it's even accelerating. So if you look at the growth in the public versus private markets over time, you can see that the number of private VC-backed companies has been taking off. What does this mean to me? It means that in order to get some of that exposure, if you're looking for more broad exposure to to equities in general, you need to be investing more in private. Now, what does that mean for the regulated investment crowdfunding markets? Well, to date, there's been nearly 10,000 raises across 8,300 companies, almost nearly $5 billion plus raised from over 4 million investors. So these numbers are fantastic, and we are seeing more and more growth from companies, from the issuers who are looking to use these exemptions to be able to raise capital. Now, if you take a look over time, there was this time during 2021 when there were these huge peaks, right? Lots of people investing online, and we saw a little bit of pullback. However, in 2025, we are actually seeing an acceleration in that growth again. So I think companies are coming back. They're realizing that they can get additional capital, not only from the private markets, but from retail investors, and that's what we're going to be talking about today.
Fantastic. Thank you so much, Brian. And with that, I think what we're seeing is that also there's a lot more demand for private capital. And in fact, in some ways, it's outstripping the supply, especially from early stage venture. And so it's more competitive than ever to raise capital. So with that, I'd love to understand how these forces show up for founders running community rounds. Kelley, over to you.
Thank you, Brian, for sharing that data. That's also interesting to look at, thinking about capital department's market share and how we influence those numbers. I would say, Maria, there's three things, right? The first thing being the high interest rates and how that's affecting how people hold on to money and how they lend the money. And then also the tighter hold that VC funding has. And that's driving an undersupply of capital. And that is what is making community rounds a real lifeline. And I would also say one thing that I've seen change over the years is the stigma, right? It used to be, oh my God, you're raising a community round that you couldn't raise from VC. And now a community round is the cool thing to do. And we've even had some VCs come to us asking us to support their founders in their portfolio companies to raise money. The second thing is a bit of blending the venture-backed round with a community raise, and it de-risks each round, right? If you have this large investment pool from one audience, it can positively influence the other audience, and it makes it easier to raise from either one. And we've often seen founders running simultaneous Reg D rounds alongside their Reg CF rounds. I actually had a conversation about that today with one of our customers. And for some people, they carve out a larger piece of their round. For some others, they might extend a Series A for their community round. Specifically with Siren Biotechnology, they've raised $20 million in venture. And if you look at that on the face value, you'd say, well, why would you raise a community round? But they're treating cancer, and they are a prime candidate and the perfect company for a community round. Unfortunately, cancer is a disease that affects 10 million people annually. And I can guarantee that everyone on this call, unfortunately, probably knows somebody that has cancer. In my family, I can think of 4 people right now, and that is the perfect company for a community round, because it's something where you can join a movement and you can really put your money where your mouth is and actually affect change in the world.
Thank you so much for that, Kelley. And I completely agree. I think there's so much power in launching a community round and giving a broad base of investors access to invest alongside VCs on the same terms, right? And this is kind of what I think the CEO of Robinhood is talking about, is like, why shouldn't private market retail investors get access as the institutional capital does? With that, Selma, what industries do you think are most attracted to community rounds, and like, what are some great fit companies?
Yeah, it's interesting. We see sort of two main categories of companies that are good fit for this. On the one hand, you have more consumer companies, CPG, food companies that have a built-in community that they can tap into and turn into customers. The other side of that is anything that is more capital intensive. As Kelley alluded to, if interest rates are suppressing or compressing the undersupply of capital, VCs aren't necessarily going to want to invest in things that need a lot of capital over a long time. But there's so many great companies and great ideas that need, that early capital to get them to generate revenue generating status, or whatever that next benchmark where maybe they are a good candidate for VC. So we see a lot of health tech, biotech, infrastructure, robotics, clean tech, anything that does have a higher capital requirement, but is also solving a really big problem where there's real potential to make returns. That can also be a really great fit for a community round.
Absolutely. And of course, that's in addition to the companies like Mercury Bank, right? Who are just really excited about the power of community rounds to, engage with their customers. And on that, I think over the course of Capital Department's short history, we've had the privilege of working with world-class VC-backed founders. We've quickly learned that storytelling is probably the most important ingredient for success as well. So Selma, how have you seen this show up in our work to mobilize thousands of retail investors online?
Yeah, definitely. I think one of the things that the best deals have in common is there's a clear enemy. There's a very well-defined problem that they are addressing. Like we said, big problems and need capital, right? People get passionate about dirty hydraulics in the heavy machinery industry, right? What if all heavy machines were electric? Imagine what that would do for the planet. Or, companies like Karen Spring Mills that is fighting big food companies and changing the food system and lifting farmers out of a commodity system. These are really systemic, big problems that startups can address and that retail investors identify that they want to back, they want to put their money against that. So the more that anyone who's raising capital can define what that problem is, like what is that rallying cry, that can really help to mobilize capital and get investors excited about what you're doing.
Yeah. And on that, Kelley, how do we balance like storytelling? Because we can always tell a great story, right? With the fundamentals of a company and making sure that these actually are good investments.
I think the wonderful thing about retail investment narratives is that you are a bit in a box of that you have to turn the story of this company into an investment opportunity. And how do you do that? How do you inspire people? And there's two things that you want to use. You want to balance the heart with the head. As Selma alluded to, we rally people around this enemy. Okay, great. We all want to kill Goliath, but we need facts. This is an investment, right? What's the ROI? Where is this company going? And that's where we reassure people with evidence. So for example, a revenue generating company like BackerKit, they're a long-standing name in the creator space. If you know anything about creators, about the early days of crowdfunding, BackerKit is there. The numbers are there. They've got great traction. 70% user increase over the last year, 4 times project launch, $23 million in revenue. Okay, great. But what if you're a first-time investor? What if none of this means anything to you and you just love BackerKit? So when we were building the BackerKit narrative, we had to balance both of those. We had to speak to their audience, but we had to tell them why this is such a great deal. And it was really important for us also to match the campaign with the ethos of their brand. And for that reason in particular, we actually broke our mold and we told their story in a way that spoke to their audience. So a super standard thing that you want to have on a crowdfunding page is what's the exit potential, right? What are some market comps? But instead of doing that, we emphasized their market validation. They were first to market with many products in the space like Pledge Manager, collab funding, and we emphasize that. We also emphasize that they build with their creators. Now, an investor might not necessarily prioritize that they're building with their community, but when we were reaching out to their community with their creators and their backers, they definitely cared about that. And that was a fact that was really important to them.
Thank you so much, Kelley. And I think that's very true. And something we've learned is that not all narratives can be you have to evolve the narrative for your audience, right? So it's a different narrative for your customers, right, who have been with you from the beginning and know you, versus maybe perhaps a seasoned angel investor who's evaluating the opportunity as well. But with that, I'd love to hear, Brian, from your side of things and on all the data. How do you correlate the success of community round outcomes with a narrative?
Yeah, it's so interesting just playing off what both Selma and Kelley have said. Sometimes we look at a campaign right as it's launching, right? And we're like, do we think this is going to be really successful or not? And a lot of times we're surprised. Sometimes the ones that we think this is going to be a smashing success ends up kind of petering out. Whereas ones that were like, this is kind of interesting, ends up being hugely successful. Like, what is driving that? And I think, some of the points that were brought up about speaking to your audience, like that's super important. I think one of the big mistakes that we see a lot of Kingscrowd on the data side, and we gather all the data on every raise, is when a founder is trying to sell their product and not actually selling the business to the audience of investors. So they're talking about this product, but the investors want to know, like, what's the opportunity here? Why would I invest my capital? And to support a very noble cause is fantastic and gets a lot of people off the bench, but people invest for a whole bunch of different reasons. So maybe it's a video game developer developing for a video game audience, or it's a CPG company. You have to understand your audience. And I think the ones that we see that end up doing really well with their capital raises are the ones who make that crystal clear, right? Who they are pitching to, and involving that community, right? You're building a community around it. And what we see also a lot in terms of success is that a lot of those investors become your brand ambassadors, your brand champions. So they're going to be telling their friends, they're going to be spreading the message. So you're not just getting the capital, you are getting actual value from those investors who may end up purchasing your product, who may share it with their friends and everything else. So I can't even, put my finger on any one thing in terms of what is driving success, but just being able to have that narrative, to be able to communicate clearly and know who you are talking to, I think is really, really crucial.
Absolutely. I think we all agree on this point. I think finding that central why is just absolutely essential. In addition, though, of course, to having a great company led by a fantastic team, I think to the points you guys have brought up, though, even all those points are not going to necessarily predict success. In fact, we believe execution is everything. So with that, I'd love to hand it over to you, Kelley. What are some learnings you've had over the years in building companies from 0 to 1 million, 2 million, 3 million plus? Yeah.
I have a very, very long list, but I know we don't have that much time, so I'll try to keep it as short as possible.
Thank you.
First, you want to start with your inner circle. Those early commitments create validation and they create urgency. And what we spoke about even earlier is the people that have been with you the longest are more likely to convert from fans, supporters, or customers to investors and then to brand ambassadors, because that is the power of communities. We want this to spread. And I would say most people take recommendations from friends or family, right? And if your friend or family says, hey, this is an amazing company, I invested in it because X, Y, and Z, you're more likely to convert from that than a random billboard on the side of the street or some blog post that you read, right? I think another thing that you want to think about is how can this one, speaking of execution, Maria, how can this one thing actually have a 10x ROI? If I do this one LinkedIn post, can I get somebody to share it? Can I tag somebody else? How do you create snowballs? For BackerKit, for example, we had a launch party and we used that content again and again and again throughout the campaign. How can you repurpose content? How can you also stay in constant communication with your audience and then also continue to grow it? I think one thing that founders, a roadblock that they hit is being shameless. No one likes asking for money, no matter where you are from the world, no matter where you come from. It's a really funny, weird topic and people get scared about it. And what we do is we help people get over that fear. There's no such thing when you're raising money as being annoying. This is also no time for humility. You want to boast from the rooftops of all the hard work that you've done, all the schooling you've done, all the long and hard nights. We put that into a nice narrative. We also put it into short, punchy copy and continue to tell people about that and continue to get them into the top of our marketing funnel and then eventually push them down our investor pipeline.
Absolutely. Thank you, Kelley. I think you're speaking to a lot of the work we do on organic investor acquisition, and not only just closing, an investment, but also encouraging folks to reinvest over the course of the campaign, which is really exciting. Just because you buy one NVIDIA share doesn't mean you won't buy another, right? Sometimes you buy on a continuous cycle. And I think the same is true for the private markets. With that,
Selma, can I chime in real quick on that?
Yeah,
I think
of course,
that's actually
Brian.
something we see in the data a lot as well, where these repeat issuers who come back and do multiple offerings, right? So we did an offering 2 years ago. Now we're going to do another Reg CF or a follow on 12 months later. Maybe they upgrade to a Reg A. Lots of the investors who invest in those original rounds definitely are reinvesting in follow-on rounds. And that's even a little bit different than what you were saying is you have investors who invest multiple times in the same round sometimes. So I think that's a lever that's underutilized from a lot of investors. You think, hey, we got the investment, awesome, on to the next new investor, right? We need to find someone else. I think a lot of times you can get a lot of value from getting them to recommit, because those are some of the people who saw your progress early on. And if you can post those updates and show like, hey, we increased our revenues, we have a new customer or new LOIs that we're signing, all that progress are reasons for people to invest even more. So I just want to, really reiterate that.
Totally. I mean, if public market CEOs are on Bloomberg selling, the potential of their stock, like the same is true for, doing digital roadshows, so to speak, for private market deals and led by exceptional CEOs. with that, Selma, I'd love to hear from you on this point.
Yeah, I mean, I think you've all already mentioned a lot of things, be persistent, develop those relationships with your founders, remarket to your investor base. I think the name of the game here is really momentum. Momentum breeds more momentum, right? So if you have an initial sort of seed audience to seed the campaign with, get to your first milestone and then leverage that to get to your next milestone, and then keep celebrating your milestones, share your business wins. There are kind of those key narrative hooks that help to then drive even more momentum and get your current investors excited, but then also new investors excited. I think also, as Kelley mentions, about finding who are the influencers in your space, either in your industry or in the investing space. There are platforms like Kingscrowd, right, which is really good at, showcasing great deals. Other platforms like Dylan Jovine Behind the Markets, there are these influencers who find great deals, talk about them, and then people who trust those individuals, do sometimes end up investing in those deals. So find out who's active in the space and try to align yourself with those platforms if you can, to then reach net new investors as well. Or even a platform like WeFunder has a built-in community of investors, which is really great to start to activate to bring kind of new investors to the funnel.
Yeah, shout out to WeFunder on that front. I'd love to understand a little bit more. I mean, I think, we've been very successful, Selma, Kelley, and myself, and big shout out to Kingscrowd as well for all the support over the years. And consistently have rounds in the top 10 in the nation and are consistently, getting a pretty big market share as well as a result. But I'd love to understand the data behind this. So Brian, how are you seeing sort of maybe capital department companies or these top 10 companies, compared to broader market averages in the work we do?
Yeah. Well, let me share a couple quick trends to just lead into that question, kind of talk about a few of the things that Selma and Kelley were talking about. So this is just a few random sampling of charts here we track the fundings from the day that every campaign launches until they close. And so these are just some ones that are open. But a couple of things you can see in a few of these charts, right? The top two, it kind of starts, with maybe that insiders, but usually there's a big bump when they kind of go live. That is really, really important, we found, towards helping offerings succeed in reaching both their kind of minimum goal, but also exceeding that and really doing better than the market averages that you're talking about. From an investor perspective, if I put my investor hat on, right, you want to arrive at a page that is an investment opportunity you've maybe never seen before. You don't want to see $0 raised. And I think that's where the importance of engaging the friends, the network, the internal community that you already have to help build some of that initial momentum really leads to potential success. Now, the other thing is having really good supporters and like capital department, being able to help guide you through not just that initial phase, but also the rest of your campaign, how you're posting updates, how you're engaging that audience, how you're pushing to the close. And so other campaigns we see have a kind of a steady upward and to the right trend, more like the one in the bottom. But when we took a look at some of the data, so we looked at, hey, we have this concept, right, that the beginning of your campaign is pretty crucial towards setting up success for the rest of your campaign. And what we took a look at was saying for the final amount that was raised, so this is less than 130,000, less than 1.3 million, and over 1.3 million, how much of the total amount raised was in the first 14 days, which is in blue. So you can see that especially for the smaller raises, and I say smaller, but the median raise in Reg CF is about 100 to 120,000. So more than 50% of raises will raise 95% of the capital in the first 14 days. But what this shows is that, even for those raises that are getting over 1.3 million, more than half of the capital is being raised in those first 2 weeks. Now, again, you could kind of think of it as that snowball effect, where it's really important to get some of that social proof and validation. But this is one of the things, when we take a look at some of the capital department raises that do really well, and there are lots of really good raises out there, they are following kind of this pattern, maybe this recipe, if you will. So I'm kind of curious, from your team's perspective, is it a cookie cutter? You do kind of the same playbook for each company, or do you change that up as, depending on the issuer that you're working with?
I think we're all smiling because we wish it were cookie cutter, Brian. With that, why don't we turn over to Kelley, because I think one of her skill sets, coming from work at a unicorn and in marketing, is understanding the value of segmentation and personalization of a massive email list or of a new community that you're even building. So Kelley, if you could speak to that a little bit, and then Selma, we'll kick it over to you to talk about the value of investor evangelists and what that means.
Definitely. And also to double click on your comment, Brian, unfortunately, I have people ask me all the time, so what do you normally see? What's regular? And I have to say every single raise is different. And I do reference Kingscrowd data, but I have to say that there's macro influences, there's micro influences, there's the founding team. There's so many components. So, no two raises are alike. That's why we were all smiling. In terms of the segmentation and audiences, I would say that using an email service provider is your best friend. There are many out there. There's HubSpot, there's Klaviyo, there's MailChimp. Those are the ones that people know. There's SendGrid. There's a lot, but it will help you to stay organized. If you are, email marketing should be part of your strategy, not your entire strategy, but it should be part of it. And it's really important to hone on in that. Who opened your emails? Who's clicking your emails? And how are you going to push those leads down the funnel and into the pipeline that I mentioned earlier? Of course, you can start by blasting all 5,000 people but eventually, like as you just showed us in that data, that will whittle down. And to Selma's point earlier is how do we get net new investors and what happens later into the campaign? And then also another thing that ESPs will help you do is identify what messaging is working. And you can see those from the KPIs. And if you have a really sophisticated ESP, they can even tell you where people's mouses are hovering. Dashboards, data. Kingscrowd is here for a reason because data is king. And although some of it may be anecdotal, it does help us to guide us as a North Star. And of course, we can use our experience to help us, but having numbers backs us up. So dashboards, if you don't already have a Kingscrowd account, you should definitely sign up for one. And also even looking at the fundraising reports that you guys release every week. And that was mentioned that we are consistently in the top 10 and top 20, seeing what kind of raises are performing well. And then you can go to their crowdfunding page and you can see, well, why is this performing so well? Things like that. Also, if you don't have a data person on your team, you can always build simple dashboards, something like Looker Studio. And then this goes back to my earlier point about consistent messaging. Play with your messaging. Don't send the same message to every audience. And then also going back to the ESP, if you're using an ESP, it's very easy to clone campaigns and change a few lines versus if you're manually drafting emails, that will take a lot more time. And then my last point is to be shameless and collect leads everywhere. Put the link to your crowdfunding page wherever you possibly can. If you are going to an in-person event, print off QR codes. You can do business cards. You can put it on your phone and just walk up to people. If you're giving a presentation, put the QR code in your presentation. It's very important that every single person you talk to knows that you're raising money, knows that the barrier for them to invest in you takes 2 to 5 minutes, and that they should also tell people.
Yeah, just to build on that and talk more about investor evangelists sort of at the other end of the funnel. But the truth is that raising doesn't start at launch, right? So the charts that Brian showed, that's because there was a lot of work before the point of going live. So, if you're preparing to raise capital, now is the time to start talking to investors before you launch. So that's a really key part is like look at it like a funnel. You have to start at the very top, start filling that so that when you're ready to launch, you've got everyone lined up. People should already maybe know about it before you go live so you can be off to the races. So that's one really key point. Then, as we're talking about, once you do build your investor list, that there is just so much gold there in building those relationships, and founders that I've seen be really intentional about sending thank you notes, within 24 hours of an investment, being very intentional about getting on calls with your top investors or every investor if you can, finding out why they invested, where did they come from, doing that research, building those relationships just pays dividends. I've even seen companies like Healthcare Originals, which just closed a very successful round. The founder, Sharon, was very intentional about this. Some of her investors that she found on WeFunder, that she met on WeFunder, are now advisors for the company, have skills that she didn't have at her company, like revenue cycle management, right? So you never know who's in your investor community, what skills they have. A lot of them invest in companies that they know a lot about, right? So you have this now incredible pool of, brain power, really, of people who are already your advocates that you can tap into to help power you. They're invested in your success. So why not reach out to those people and in that community and keep, driving driving success. Another great way to do that are monthly investor updates, to do it in more of a systematic way. So you have your thank you want to send a couple, touch points to build relationships, but then on a monthly basis, you want to be communicating with your investors while the campaign is live, and maybe even after. Definitely at least an annual, hopefully, is required for a lot of campaigns, if not biannual, if not quarterly, if not monthly. The more you talk to your investors, the more you are going to make them your evangelists, and investors then become multipliers for your business. So
I can't agree more. So as an investor, I've invested in 240 plus companies through Reg CF and Reg A. The founders who do extremely well tend to be the ones who give the updates, right? And I think they understand the value that just because your fundraise closes doesn't mean those now go off into a spreadsheet and you look at them once a year. Providing updates is hugely important. A, because it's probably going to save you time as a founder, because you're otherwise going to start getting a bunch of questions. So if you're more proactive, but going back to what we were talking about earlier, you are building potential repeat investors for future rounds by nurturing that audience and keeping them connected. And these are people who gave you capital, right? Like they believe in you, and giving them updates brings you to the top of mind, where maybe then they bring it up with someone else. Another case in point of a point you brought up, Selma. So I actually invested, before I worked at Kingscrowd, I invested in Kingscrowd back in 2018. That's how Chris Lustrino and I met. Became a good relationship and ended up joining the team full time. So these types of non-monetary things that you get out of the retail audience can also be huge.
love that.
I love that story too. That's awesome. Thank you so much, Brian. And thank you to all of our panelists today for speaking to the power of community rounds, especially in this evolving landscape as companies stay private longer and there's more interest in the private markets overall. And we could probably have a whole other session on that alone. But with that, let's open it up to the audience for questions. And I always like to reward the bravest person who goes first. So Knox Gabriel, hello, wherever you may be. So you're asking the question about working with potentially an agency to structure your round, but there are so many offering similar services, and how you might navigate that. I would suggest that you speak to as many as you can. Make sure that you appreciate their approach, but more than anything, ask to speak to or check their track record, and and make sure that they have one. That's really where I would start. And I'll open it up to the panelists if they have any other things to add there. No? Okay.
That's right.
I'll just say, if you're looking to check their track record, Kingscrowd is a great place to do it. It's very easy to do. You can go to the advanced company search page and just say, I know they worked with this client, see how they did. Pull that up for capital department. You're going to see many of the top raises that are out there. So, good shout out to all of you doing really great work.
Thank you, Brian. I appreciate that. We have a lot of nice things to say about you all too. We start our Mondays, by the way, looking at Kingscrowd data and looking at how we've performed against the market averages. So that's the first Slack that we all receive. So with that, the next question is around the role of paid media marketing. I know Kelley spent a lot of time talking about organic acquisition. Selma, maybe you can speak a little bit to our thesis or ideas around paid.
Yeah, so paid can definitely be part of the strategy, and I understand it feels very uncomfortable to pay for investment. So typically we recommend that you max out all of the organic channels that you have available to you first, to see how far you can get with that. If you kind of feel like, wow, things are going well, and either we've tapped that out, we want to keep going, or, well, it didn't go as well and we kind of need to reach the next rung, that's a good time to start looking at some paid. Doesn't need to be a lot. You can start with quite small spend, start with $50 a day, see if you can start to test some creative, test some copy, get some signal, and then be intentional about who who you are marketing to. For example, optimizing for conversions rather than just pure traffic. You want to make sure if you are spending money on ads that you are getting quality leads and people with high intent to invest. So the more you can optimize around that. But in sum, it's really a great way to fill the top of funnel to start reaching out to net new potential investors when you feel like you've tapped out other channels, or maybe you're just really looking to go big, you've got a lot of money to spend and go for it, then it's a great complement for a raise for sure.
Yeah. I would echo though that, you know, as folks who are working with stellar deals, I think that our CEOs are hesitant to put a lot of money into paid acquisition all the time, just because you have to look at the cost of capital overall on an average basis. So we are big proponents of organic, and with a sprinkle of paid is how I would define our strategy there.
If you're not getting a 4x return on your ad spend, then it's probably not a great channel for you once you factor in all your costs and everything. So yeah, really critical that there's a return.
Agreed. So thank you for the anonymous attendee for that question. We have a few more here. This one over to you, Brian. How would you determine the optimal raise amount for a Reg CF offering?
Yeah, it's a good question. So when you say optimal, I guess you could be talking about a couple different things. Now, every issuer that files there, it's called the Form C filing. When you want to kick off an online Reg CF round, you have to have a minimum threshold, which essentially means if you raise less than that, the funds get returned to investors. So that's the amount you really want to set to say, hey, we're going to raise this capital. If we get $1,000, like we're not going to be able to do anything with that, right? So usually there's some milestones or something else that the issuer is working towards, and you want to kind of set that minimum threshold in a good balance to be able to make sure that you're going to be able to do something with the funds that you raise. We tend to see minimums around, say, $50,000, $100,000. Then there's a maximum target. So the maximum raise for a Reg CF can go up to $5 million. Now, a lot of times you'll see issuers more around 1 million. It kind of depends on the different financial auditing thresholds of whether they want to go for 5 or 1. So at that point, it really becomes more of a balanced decision and discussion in terms of, do you need that much capital? Like, are you if you're a Main Street business doing a debt round, maybe you don't need $5 million. Maybe you need to buy a new pizza oven or something for your shop, right? So for that, maybe you just need a couple $100,000. But usually you can set that maximum up there. So the optimal within that is kind of within, you know, those constraints. And that's where it really comes down. I would say it's probably more of an art in terms of just determining, like, what do you need to get to that next milestone for your business.
Thank you, Brian. And then over to you, Kelley, on this one. What role do perks and investment tiers play in campaigns?
I think you can get quite creative with them depending on your business, and they can definitely act as a bonus or a bit of a carrot. One strategic move that you can do with perks is most of them usually roll up. And what you can do is email, let's say you have a $1,000 perk and a $1,500 perk. You could email all of your $1,000 investors and say, hey, for $500 more, you can get another perk. So that's the way that you can strategically use perks to actually create fund investment, and then also to create a higher volume of investment.
Awesome. Thank you, Kelley.
And I think chime in one quick thing on perks.
Brian.
You know, I think it's different for every company, but I think when you're thinking about perks, it can also be helpful. So obviously, if you're a consumer business and you're kind of pitching to that audience as your potential investors, the perks can align really well. It can be a lot of effort if you're doing things like, you know, hats and t-shirts and that sort of thing. So I tend to, as a just investor, this is my own personal opinion, I prefer perks that are aligned with the brand, right? Happy to always, you know, don a hat and kind of spread the brand message, but especially if has something to do with the product that you are doing, I think you can get really good synergies with that.
One thing to add there, Brian, that's a really good point. You don't want to have a perk that takes away from your main business. So it's very easy to have a virtual investor meeting or to maybe have a dinner in a major metropolitan city. But if you don't make hats, you shouldn't waste all of your time and effort and energy making hats.
I agree.
Agreed.
An example is that I recently had the privilege, I should say, of investing in Fathom, the recorder, which our team uses every single day, thanks to them doing a Reg CF round. And one of the perks is that I got a gold badge for being an investor. And I have to say, every time I log into Fathom, I appreciate that gold pixelation in my dashboard. And so I don't think that that was a huge lift for their product team, but it did make me feel super engaged and loyal to the recorder company. So with that, let's see. I think we have time for one more question. So this one will be for you, Selma, and then we'll wrap up and end on time because who doesn't love that? Selma, how do you balance building a community of brand advocates versus purely financial investors?
It's a great question. I mean, I think the question itself is kind of putting them at opposite sides of the table where I really feel like they're closer than we might think in terms of brand advocates and financial investors. I think they are often one and the same. A lot of companies that, or a lot of investors that come and invest in companies raising Reg CF are brand advocates and financial. So they both want a return and they want to see that brand do well. So the balance of building those, obviously you have a capital goal that you're trying to raise and you need bigger checks and you are maybe looking for some angels and institutional investors to come in to fill out that round, but then you also want really engaged members from your community supporting that as well. So I guess it's about looking at, where are your larger checks going to come from? Those might be the more purely financial investors. There might be a little bit more due diligence. Those are the ones that you might want to get on a call, make sure they're comfortable, answer all their questions, and then building the brand advocates. That might be you do a webinar for a group of those, right? And you're kind of marketing them to them more as a group. So that might be one way to think about balancing those two.
I love that answer. Thank you so much, Selma.
To jump in, sorry, I keep piggybacking off everyone. I
No
think,
need to apologize, Brian. We're thrilled to have you
all
here.
right. Another thing that really like best in class campaigns that I feel that they do well is they're very responsive and thorough in the Q&A. Sometimes we see, so every page on the funding platform has to have a Q&A section. And if the founders are taking 2 or 3 weeks to respond, or they have very short responses, or it's, hey, reach out to us at investors@company.com, that's not helping the other investors. And the founders, and whether it's your founder or just another person on your team who are very responsive, very thorough, all of those Q&As get looked at by many of the investors that are potentially going to invest. That is honestly one of the first places that we see many of our investors who use Kingscrowd go to, because you can learn so much. Those are gold just in terms of the value of the different perspectives and backgrounds of the people asking the questions. Maybe you're assessing a biotech or a pharma deal and you're not a doctor yourself, but some doctor from Illinois or somewhere else, is asking a question. You get to learn based off that. So I would say don't disregard and don't put that kind of on the back burner. I think the Q&A is a really important part of making sure that a campaign can succeed.
I couldn't agree more. I think at Capital Department, we believe that that's where retail investors really get their chance to sit in the room and diligence a company, unlike institutional investors who basically get a whole meeting and can reschedule as many times as they please. Not that I've ever had that experience when raising venture. But with that, let's close up today. And what would be a startup event without a call to action or an ask? So let's practice. Brian, over to you to start.
Oh, thank you. Yeah, I would just say, so, if you are an investor who is trying to think about how you find some of these best in class opportunities, definitely check out Kingscrowd. A lot of the tools and the data that we have is completely free. If you are an issuer or a potential issuer thinking about raising capital, you have 3 amazingly knowledgeable people who have a very good track record, which you can go look up on Kingscrowd, and I'm sure you'll hear more about. So definitely reach out after the call. I'm sure we can share contact information as well.
Thank you, Brian. Crushed it. Kelley, Selma?
Sure. Well, just +1 to Brian's call to action. Definitely create a Kingscrowd account. I am on Kingscrowd every day, multiple times a day, and find so much value out of the platform. So go do that now. I'm sure you're all Kingscrowd users already because you're here with us. So spread that. And then we really believe that this is a new frontier in capital markets in terms of more founders raising capital from retail investors. I'm excited that we get to open access to these deals for more investors. If you're thinking about raising capital, you need a partner to execute with, reach out to us. We're just really dedicated to opening the space to more world-class founders as well.
Beautiful. Thank you so much. Thank you everyone for coming. You'll see this recording. Kelley, any final outro?
Definitely. We have an open door policy. So if you didn't get your question answered, feel free to send me an email. It's Kelley, Kelley, at capitaldep.com. We are more than happy to keep this conversation going.
Love it. Thank you, everyone. And thank you to all the brave founders out there on your path to closing millions of dollars in capital. Talk soon. Bye.